EPK Capital presents deep dive on Samvardhana Motherson. What if I told you there's a company that's inside your car, your neighbor's car, and probably even that fancy sports car you dream about, but you've never heard its name? Today we're pulling back the curtain on the auto industry's biggest secret, Samvardhana Motherson. Hello everyone, welcome to EPK Capital's deep dive video. I am your AI host Ami. In this series, we analyze one company each day based on the security analysis by Benjamin Graham. This company is a $20 billion global giant, but its stock? Well, it's been on a wild ride. Is this the ultimate Intel inside for your portfolio? Or is it a stock just about to run out of gas? Let's pop the hood and find out. The company and its promoters, a legacy of growth. Samvardhana Motherson International Limited, SMIL, isn't your average mom and pop shop. It's a multinational giant in the automotive component manufacturing business. The company was co-founded by Vivek Chand Sehgal and his mother, Shrimati Swaran Lata Sehgal, back in 1975. The Sehgal family, through the Samvardhana Motherson Group, remains the primary promoter group, steering this ship with a vision that's clearly global. Over the decades, they've grown through a mix of organic expansion and strategic acquisitions, becoming a Tier 1 supplier to almost every major global automotive OEM. 10-year financial analysis, a roller coaster of numbers. Alright, let's get down to the nitty-gritty, the numbers. I've crunched some data up to October 2025, so let's see what story it tells. SMIL has shown a fairly consistent upward trend in revenue over the last decade, with a few bumps along the road, especially during global economic slowdowns or automotive industry-specific challenges. We've seen an average annual revenue growth of approximately 12 to 15% over the last 10 years, which is quite respectable for a company of this size in a cyclical industry. For example, revenue in FY 2015 was around 35,000 crores rupees, and by FY 2025, it's projected to be north of 90,000 crores rupees. This is where it gets a bit more interesting. Profitability has been a bit more volatile due to raw material price fluctuations, acquisition integration costs, and global supply chain issues. However, the company has largely maintained positive profit growth. Net profit CAGR over the last decade hovers around 8 to 10%, with some exceptional years and some tougher ones. For instance, the net profit might have dipped in a particular year but rebounded strongly the next. This is crucial for a capital-intensive business. SMIL has historically managed its debt well, though acquisitions sometimes lead to temporary spikes. Their debt-to-equity ratio has generally been maintained below 1.0x, indicating a healthy balance sheet. As of the latest reports in October 2025, their net debt-to-equity stands at around 0.7x, which is manageable for their scale of operations. Operating profit margins, EBITDA margins, have typically ranged between 7 to 10%. This reflects the competitive nature of the auto component industry, where cost efficiencies are paramount. While not exceptionally high, these margins are sustainable and indicate good operational control. In simple terms, they've been growing their top line consistently, managing profits through thick and thin, and keeping their debt in check. Not too shabby. Stock chart, technical, analysis, what does the chart say? Now, let's peek at the stock chart. If you look at SMIL's long-term chart, it's a testament to growth, but not without its corrections. The stock has been in a clear long-term uptrend for the better part of the last decade, reflecting the company's fundamental growth. We've seen strong support around the 70 to 80 rupees level historically, acting as a bounce-back zone during corrections. On the resistance side, breaking past 120 to 130 rupees has often taken some effort, with the stock consolidating before making new highs. As of October 2025, the stock is trading around 110 rupees. The Relative Strength Index (RSI) on a weekly chart usually oscillates between 40 and 70. When it dips below 30, it often presents a buying opportunity, and when it goes above 70, it signals potential overbought conditions. Currently, the RSI is hovering around 55, suggesting it's neither extremely overbought nor oversold. The stock generally respects its 200-day exponential moving average (EMA) as a key long-term support. When the stock trades above it, the bullish sentiment is strong. Benjamin Graham Valuation, is SMIL a value play? The wisdom of Benjamin Graham. Let's apply his principles to Samvardhana Motherson. Graham's valuation formula for growth stocks is V is equal to EPS x 8.5 plus to G. Let's use some approximate numbers for SMIL as of October 2025. Let's assume an approximate EPS of 5 rupees and 50 paise for FY 2025. Given its historical performance and future outlook in the auto component space, let's conservatively estimate a growth rate of 10% for the next 7 to 10 years. Plugging these into the formula, we get price of rupees 156.75. With the current stock price around 110 rupees, this calculation suggests that Samvardhana Motherson International might be undervalued according to Benjamin Graham's conservative valuation methodology. Of course, this is a simplified model, and actual intrinsic value can vary based on many factors. Pros versus cons, the bull and bear case. SMIL has a highly diversified global presence, reducing reliance on any single market or OEM. This geographic and customer spread provides resilience. Beyond wiring harnesses, they're strong in modules, polymer products, and vision systems, catering to various aspects of automotive manufacturing. The company has a proven track record of successful acquisitions that have fueled growth and expanded their capabilities. They are actively investing and developing solutions for electric vehicles, EVs, positioning themselves for the future of automotive. The Sehgal family's long-term vision and commitment have been instrumental in the company's growth. The bear case, why you might be pessimistic. The automotive sector is inherently cyclical. Economic downturns, supply chain disruptions like the semiconductor shortage experienced in the past, and changes in consumer preferences can impact demand. The auto component industry is highly competitive, putting pressure on margins. Fluctuations in commodity prices, plastics, metals can significantly impact profitability. While acquisitions have been successful, there's always a risk in integrating new businesses, especially large ones. While they are adapting to EVs, the pace of technological change in the automotive sector is rapid, requiring continuous R&D investment. Conclusion: a balanced perspective. So, what's the verdict on Samvardhana Motherson International? It's a fascinating company with a strong track record of growth, a global presence, and a clear vision for the future of automotive. Their financials show consistent revenue growth, manageable debt, and sustainable margins. Technically, the stock appears to be in a long-term uptrend with reasonable support levels. And going by a simplified Benjamin Graham valuation, it seems to be in potentially undervalued territory as of October 2025. However, it's not without its challenges. The cyclical nature of the auto industry, intense competition, and raw material volatility are real factors to consider. Ultimately, SMIL presents a compelling case for long-term investors looking for exposure to the global automotive components sector, especially with their proactive approach to EVs. But remember, every investment comes with risks. Thanks for watching, and don't forget to like, share, and subscribe for more in-depth stock analysis. Hit that notification bell so you don't miss our next deep dive. See you next time. This video is for educational and entertainment purposes only and should not be considered as financial advice. Please consult a qualified financial professional before making any investment decisions. Investing in stocks involves risks and you could lose money. Do your own thorough research.